Japan's ruling party just approved a national AI and blockchain financial system and tasked their financial regulator with building a 5-year roadmap. SBI and Rakuten are preparing crypto investment trusts for Japanese investors, and Ripple already has 26 institutional banking partnerships operating inside Japan right now. These three things did not happen separately. Before I get into this, did you know Japan's government was already this far along in planning a national blockchain-based financial system? Drop a yes or a no in the comments right now. This is not financial advice. This content is for educational and formational purposes only. Always do your own research before making any financial decisions. If this kind of global coverage is useful to you, hit the like button. It helps this channel reach more people who need to see it. Now let me walk you through exactly what happened and what it means for the thesis you have been holding. Japan's Liberal Democratic Party, Japan's ruling political party, officially approved a policy proposal earlier this month. The proposal's formal title is Next Generation AI and On-Chain Finance Concept. It was submitted to the government earlier in May and has since been approved by Japan's Government Policy Council. That approval carries the full weight of a formal government-level decision. Not a study, not a recommendation, a cleared policy with a named mandate attached to it. Japan is not running a blockchain pilot. They have formally approved the first step in building a national financial system that operates on blockchain technology combined with artificial intelligence. For anyone coming to this without a background in blockchain, here is what that means in practice. A blockchain is a shared digital record. Every transaction written to it stays there permanently. Multiple institutions can read it, verify it, and act on it without needing a single central authority to confirm what the record says. Japan's own proposal describes blockchain using 3 specific words: tamper-resistant, verifiable, and programmable. Those 3 properties explain exactly why a government would choose this technology over traditional banking infrastructure. It cannot be secretly altered. Every institution can independently verify the same record without relying on the others. And it can execute transactions automatically without a human sign-off at every stage. That third property, programmability, is where artificial intelligence connects. The proposal describes the goal as developing an automated financial infrastructure that supports 247 agentic commerce via blockchain networks. Agentic commerce means financial transactions carried out by automated software agents acting on behalf of buyers and sellers around the clock across borders without the friction of business hours, paper processing, or intermediary approval at every step. Japan is building the legal and technical foundation for a financial system where money moves the way information moves continuously, instantly, and without geographical limits. The proposal is specific about which assets this infrastructure will handle. Japan's government supports the tokenization of assets such as stocks and yen-denominated stablecoins. Beyond that, the proposal calls for the tokenization of the Bank of Japan's current account deposits. That item deserves attention. A current account deposit at the Bank of Japan is not a consumer savings account. It is the reserve that commercial banks hold at the central bank itself, the highest level form of Japanese money in the entire financial system. Tokenizing that on a blockchain means the foundational layer of Japan's monetary infrastructure would move through a blockchain network. Japan's Financial Services Agency, the FSA, has been tasked with building a 5-year roadmap to promote investment in this project from both public and private groups. That roadmap is now officially underway. In the same policy window, Japan's FSA released a ruling with direct relevance to everything Ripple has been building inside Japan. The FSA officially recognized foreign-issued stablecoins as legitimate electronic payment methods under domestic law. The ruling takes effect June 1st of this year. A stablecoin is a digital asset pegged to the value of a traditional currency. The FSA's decision followed months of auditing to ensure compliance with Global Clarity Act standards and domestic anti-money laundering protocols. Foreign-issued stablecoins can now be fully integrated into Japan's institutional banking infrastructure. This ruling matters because of what it unlocks for a specific deal that has been waiting. In August of 2025, SBI VC Trade, the crypto arm of SBI Holdings, one of Japan's most prominent financial groups, announced that XRP would be distributed within Japan with a target launch in the first quarter of 2026. That window came and passed without the distribution going live. The FSA's recognition of foreign-issued stablecoins as legal payment instruments appears to be precisely the regulatory clarity that arrangement was waiting for. June 1st may be the date that changes that. Ripple is not a new name in Japanese finance. Ripple has long-standing partnerships with some of Japan's most established financial institutions, including Japan's third-largest bank. Mizuho, one of Japan's most recognized banking institutions, supported the Japan FinTech Innovation Initiative, a program that developed financial solutions specifically on the XRP ledger. These are documented institutional relationships with a specific blockchain built over years. Which brings the question into focus. Now that foreign-issued stablecoins are legally recognized in Japan, and the FSA is building a 5-year national blockchain roadmap, what does that specifically unlock for the infrastructure that Ripple has been assembling inside Japan? That question becomes easier to read when you go through each layer of what Ripple and XRP already represent inside Japan's financial ecosystem, because the answer is not in a single announcement. It is in the depth of what already exists. Start at the consumer layer. Routine is one of Japan's most deeply embedded consumer platforms. A loyalty and commerce ecosystem spanning online shopping, travel, banking, and everyday retail. At the end of April this year, Rakuten Wallet announced that its users can now convert Rakuten loyalty points directly into XRP, trade XRP spot within the app, and spend across a network of more than 5 million merchant locations. Rakuten holds approximately $23 billion in loyalty points across more than 44 million users. Those $23 billion in existing consumer value are now redeemable for XRP. This is not a specialized product for a small group of crypto consumers. This is one of Japan's most mainstream consumer platforms, with 44 million account holders integrating XRP into real daily commerce. The institutional layer carries the forward-looking signals. Routen Securities and SBI Securities have announced plans to offer crypto investment trusts to Japanese investors once regulators finalize the rules. An investment trust is a pooled investment vehicle, similar to a mutual fund, where investors contribute capital and the fund holds the assets on their behalf, providing exposure without requiring each individual investor to directly manage custody of digital assets. 11 additional firms have publicly indicated they would consider entering this market once the rules are in place. The names that have surfaced include Nomura, Daiwa, and Mizuho, 3 of Japan's most established financial names. When firms of that standing indicate they are watching and may follow, that is a signal worth noting. Both Rakuten and SBI, the 2 firms already committed, already have established operational relationships with XRP and with Ripple. There is something specific about the Nomura signal that matters for understanding the pace at which this market moves. Nomura does not signal entry into markets casually. When firms of that standing publicly indicate they are considering a product category, it changes the perception of that category for a large portion of Japanese retail investors who follow institutional cues. The fact that Nomura is watching a market where both Routine and SBI have already committed both with documented ties to XRP and Ripple is a signal that the market itself is reading carefully. At the payment infrastructure level, SBI Ripple Asia completed the development of a token issuance platform on the XRP ledger and registered as a prepaid payment instrument issuer in Japan. That registration is a regulatory license granted by Japanese authorities, authorizing SBI Ripple Asia to issue digital payment instruments on the XRP ledger's public blockchain inside Japan. This is not a proof of concept. It is a legally licensed payment infrastructure operation running on a specific public blockchain. SBI Remit, SBI's international money transfer service, which runs on Ripple's distributed ledger technology, has reached 26 institutional banking partnerships in Japan. The most recently reported addition is Totori Bank. Totori Bank partnered with SBI Remit to provide remittance and salary deposit services specifically for foreign workers employed in Japan. Salary deposits are not speculative instruments. They are payroll. When a business in Japan uses SBI Remit to pay the wages of foreign workers, that payroll runs through Ripple's distributed ledger technology. 26 financial institutions in Japan have signed onto a network built on that technology. Then there is the Tobu Toppers partnership. SBI and Tobu Tops are issuing prepaid payment tokens on the XRP ledger's public blockchain. The market those tokens are connected to is valued at 30 trillion yen. That is not a pilot figure. That is a defined, measurable national-scale commerce market being built on a public blockchain in Japan. On the Crossbar side, DSR V Labs, backed by Samsung Next, and SBI Ripple Asia, signed a memorandum of understanding to research blockchain remittances across the Korea-Japan corridor, with the XRP ledger as the primary technology for fast, low-cost cross-border settlements. That agreement links two of Asia's largest economies through a single research framework centered on one blockchain. Consider what this picture looks like for someone who has been building a position over years, not months. Someone for whom the question is not what this might do next quarter, but whether the ground they are standing on is solid. Every element covered here represents a real layer of infrastructure. A consumer platform with 44 million users, a licensed payment entity operating on the XRP ledger, 26 institutional banking partnerships running on Ripple's technology, a 30 trillion yen tokenized commerce market, and a cross-border research corridor connecting Japan to South Korea. Each layer was built independently. Each layer uses the same technology. And each layer now exists inside a country whose ruling party has formally approved a national AI and blockchain financial system, with the FSA given a 5-year mandate to connect all of it into a coherent national structure. The question the national proposal does not explicitly answer is the one that the evidence on the ground already begins to answer. Japan's government described blockchain as largely tamper-resistant, verifiable, and programmable. Japan's FSA is building a 5-year roadmap for national blockchain infrastructure. Japan's private sector has been assembling Ripple-based infrastructure for years. 26 institutional partnerships, a licensed token issuance platform, a 30 trillion yen tokenized commerce network, a research agreement connecting it to South Korea. Which blockchain has the deepest existing infrastructure inside Japan right now? The proposal document does not name one. The ground-level record speaks clearly enough. Stepping back from the individual pieces, the pattern that connects all of them deserves to be stated directly, because each announcement is easy to absorb as its own isolated event and much harder to overlook when you lay them all next to each other. Japan built the world's largest retail foreign exchange market for a structural reason that had nothing to do with speculation. Japan's citizens face something that most savers in Western economies have not experienced to the same sustained degree: decades of near zero and sometimes negative interest rates. When a savings account pays nothing and the system shows no sign of changing, people find other ways to make their savings productive. Japan's retail investors built one of the most sophisticated retail trading cultures on earth, precisely because the alternative was leaving money to slowly lose ground. Ripple's vice president for Asia Pacific, Fiona Murray, named this dynamic explicitly: low interest rate economies like Japan and South Korea push retail investors toward alternative assets, the same way Japan built its massive retail foreign exchange culture. A population searching for yield finds a system, and that system grows. That same behavioral pattern, decades in the making, is now meeting a regulated institutional on-ramp at multiple levels simultaneously. Region's 44 million users can convert $23 billion in loyalty points into XRP and spend at 5 million merchant locations. SBI's distribution deal may go live as early as June 1st, the date Japan's FSA foreign stablecoin recognition takes effect. 11 firms, including Namura, Daiwa, and Mizuho, are preparing to enter an investment trust market that barely existed months ago. 26 institutional banking partners are already operating through Ripple's distributed ledger technology. A 30 trillion yen commerce market is being tokenized on the XRP ledger, and South Korea sits alongside Japan in this picture. XRP has been dominant in both South Korea and Japan, both identified by Ripple's own leadership as low-interest rate economies, where retail investors are structurally pushed toward alternative assets. DSRV Labs and SBI Ripple Asia have already signed a memorandum of understanding specifically for the Korea-Japan cross-border corridor centered on the XRP ledger. The infrastructure is not being built inside a single country. It is being connected across two, covering all of that from the top. Japan's ruling party has approved a national AI and blockchain financial system. Japan's FSA, as of June 1st, legally recognizes foreign-issued stablecoins as electronic payment methods. The government has given the FSA 5 years to build the roadmap that connects public and private sectors into a single national blockchain structure. Japan's private sector built the infrastructure from the bottom up. Japan's government is now formalizing the direction from the top down. What was being assembled through individual agreements and regulatory applications now has a national policy framework sitting above it. For the patient investor who has followed this through stretches where nothing seemed to be connecting, where each announcement arrived and then drifted without a visible link to the one before it. This month in Japan is the clearest signal yet of what the assembled pieces actually look like from a distance. The structure was there before the announcement. The announcement named it. The final question worth holding is this: Japan went first. It is the world's largest retail foreign exchange market. It is a country with a demonstrated decades-long structural incentive to adopt alternative financial infrastructure. When a country of that scale formally commits to a national blockchain financial system, and the company with the deepest infrastructure inside that country has 26 institutional partnerships, a licensed payment platform, a 30 trillion yen tokenized commerce market, and a research agreement connecting it to South Korea. What does the rest of the world do when they watch Japan go first and the infrastructure is already there? Tell me something in the comments. Before today, did anyone in your circle know that Japan had already officially approved a national blockchain financial system? I'm genuinely curious. Drop it below. If this video gave you a clearer picture of what is actually happening, go ahead and like it. It helps this channel reach more people who need to see this, and subscribe so you do not miss the next one. Share this with someone in your circle who is only following domestic crypto news and has no idea what is happening globally. Stay informed, stay positioned. I will see you in the next